We have been through one set of these already, but this will be part 2 of the Dormant Volcano setup. So we're just going to go through some more case studies. I'll try to throw in a few different varieties so things don't get too mundane and boring, and try to just keep you on your toes with some different sorts of examples. So for our first example here, you look down here and see it's negative 0.05, so you're good to go there. Hopefully I just confused you and you said, wait a second, why did he say that? I want to do this example and start things off to show why safeguards are in place. So maybe you're looking at this and thinking, all right, 0.05 or negative 0.05, that's as close to 0 as it can get. That's fine. I know what the rules say, that it has to be 0 or positive, but close enough. I'm gonna play this one. So at this point, you're you are going off the path. So I just want to use this example to show why the safeguards are in place. So a trigger point here would be, a pretty logical one would be right up there. You can see it's already bounced its head on there a couple times, but that would make sense when you look back here and see that it has a history of acting as support, and then right there it turned into resistance. So okay, this level right there would be your initiation point. And again, not 0, but you're thinking, all right, close enough, 20, 50, then they're on a crash course. I would agree with that. You can tell that they're going to be crossing. And let's see what happens. So the next period right there finally goes positive. You're like, all right, I got filled. I know it's a red candle there, but everything's fine. It's finally positive. Now things are good. Next day falls down, and then you can see what happened. Stopped out there or there, assuming you're disciplined. But if you're breaking the rules and getting in up here, I would have to question whether you're disciplined. So, even if you're disciplined, you just got yourself into a losing trade by just simply violating the rules. And then if you became undisciplined, you can see that it actually could have become, a pretty darn disastrous move for you. And then I also want to show now why that's important. So, it was negative 0.5 here, and then after this candle, it went to being positive right there at 0.07. So let's say you pulled it up on the watch list now, and you're like, okay, 0.07 looks good, crash course. I'm going to put my trigger point right here at that same spot. So nothing's changing other than it's now positive. Let's see what would have happened. No fill, and you'd have been fine out of the woods. So that's why it's very important. This has got to be 0, because it can be just literally a couple of candlesticks that'll make that difference. And this one would avoided, potential disaster. Now, is that going to work out like that every single time? No, because that would imply that you're never going to lose and everything's going to be winner. However, this is why the safeguard is in place with the MACD signal line. You don't want to get caught in anything like this and jump the line. So I don't care if it's 0.00001. It's still negative, so just stay away and wait for it to get positive, and then base your trade off of that. So this is the same chart. So let's just kind of go on So let's say you actually, all right, so let's say you had gotten in there, and remember the rule, so you're still monitoring it. Okay, it's looking like that. And then I'm watching down here, so keep watching that. That's the main thing I want you to watch. So right here, negative 0.05. At this point, it's off your watch list. Remember, if it goes below 0 without breaking your point, no need to clutter up your watch list. Free up some of that real estate and, get the ticker symbol off there. So at this point, this chart is now off the watch list. So let's just watch the history, though. History meaning let's keep an eye on that MACD. So negative, negative, negative. You can see it's negative, so this has been off your watch list for a while. And now it's starting to come back up again. And let's see, right here is where it all of a sudden, all right, it's positive again. So this pops back up, and you're like, hey, I remember that chart. That was a chart I either almost got into and broke the rules, or maybe, hey, that was a chart that I got into because I broke the rules. I'm not going to do that this time. This time it is above 0 and positive. So now let's see what happens for that. So looking at the excitement gauge, you can see down. So we are dealing with a dormant volcano here. 20 in regard to the 50. Again, crash course, you can see pretty darn tight there. Gonna cross more than likely, so we're safe there. So now let's figure out our initiation point. So for this, you look back and you could put it right there. Okay, that was a key resistance. Price is already above it. So what would be another area of resistance? And to me, right there would make a pretty decent profit point. You can see lots of history right here. Again, we're talking about a stock over $20, so give or take a little bit. As long as you're basing it off of some sort of point over here, whether it be Actually, now that I do that, that one makes a little bit more sense to me because I'll explain my rationale. You can see acted as support, 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 and then when the price did fall below it right there, you can see the price did not like that. So I stand corrected. I would have put my profit point right around here, but again, even if I had put it up there, let's just say that I went with that. I never changed it, and I still just put it up here. Let's just watch how the trade would have still unfolded for me. So there we have that, and then our next point is we need that profit point. So this one, you know, it's a little, I don't want to say confusing, but you have up here that could be a point. You have these areas here that could be a point. Depending on how aggressive you want to get from me, I'd split the difference and I'd just put it, you know, right around there. Again, up there could be illogical down here, so I would just split the difference. So there's my first profit lock point. Let's see what happens here. So next day, nothing, you know, remains above zero, so totally justified to remain on the watch list there, pulls back some more. And then right here, you can see it goes up there and triggers you probably right towards the end of the period. So the trade is now in. 10 EMA people down here, 20 here. You can see the 20 is now crossed over the 50, so that's always a good little, you know, kind of sign of relief. So right here is an example where, depending on how you play the gap, you may not have gotten filled. Remember, if it opens up above the gap, the trigger point becomes your entry point. And you can see the trigger point here was right basically at 2067, we'll call it. And the lowest it went on the next period was 2070. So within 3 cents, but you would have not gotten in, assuming that you play the rule of use the trigger point as that. So let's just see what happens. But right here, the next day, you would have gotten in. So you're back in right here because you waited for it to come back to you. 10 EMA, that would still be in play for you. And this trigger point up here would still be in play for you. Although if you wanted, you could shift that up because now that we have more chart data, if you wanted to, this is just general chart knowledge stuff here, you could put it up there. But for this example's sake, I'll just leave it right there. So right there, good example of the 10 EMA doing its job and why you want a cushion. Didn't hit it right there. And then there is why we have cushions. Came down so close, did not hit it though. And even if it had tapped it, you know, that's why we want that cushion. And then the next day came up and hit our first profit lock point. So there's what the types of moves we want. And, you know, why we want to be disciplined with stop losses, but why we want to give some things some wiggle room. Because keep in mind, uptrend is starting, so we got to give it some pullback room. But at the same time, we don't want the pullback to, you know, turn into a reversal on us. So now let's figure out where our next profit lock point would be. Let's see. I'd just put it right up there. Again, I'm pretty aggressive with my profit lock points. Given that the entry would have been down here, I'd be perfectly happy with over a $1 move for the next area of profit. So the next day here, just a huge score here. So this is, you know, this is why we trade. This is why we got to keep the losses small, because moves like this are what's gonna, you know, keep our accounts in the positive. So this is also an example where step 12, that's optional for the second. If you saw the gap up and, you know, maybe you're watching level 2s or whatever, and it was just the orders were flying in, then you could have backed this up to right here. That would have made a perfectly sensible point, and you'd have still gotten out with room. Now again, when you're unsure, just still lock in those profits. No shame in that, because remember, you'd still have shares because the goal is to still have about 1/4 of our shares left. So either way, whether or not maybe you covered there and said, oh man, I really should have just not done that second profit lock point, or I should have moved it up there. Don't worry about it, because you're still going to have shares. So let's just kind of speed through this one now and see how everything would have played out. So 10 SMA people, I guess I can zoom back in here, would have been stopped out right here. And then 20 down here. So this is one where the 10 made more sense because they would have gotten stopped out sooner than the 20. And both strategies would have still had, you know, access to this continued move here to where they could potentially lock in some more profit. So remember, this was all the same chart from the one where you could have potentially broken the rules. And on that note, I want to just, you know, from a psychological standpoint, if you break the rules on one chart or you have a loser on one chart, don't sit there and say, I refuse to ever play this chart again. That is the dumbest thing ever, because this example, that's why that's dumb. Don't take things personal. They're just ticker symbols, and that's how you have to treat them. You know, you may break a rule on one, or one may be a loser for you, but it can come back and then just be an absolute This is a nice home run here. It could be a nice home run from you. Entry here, and then all the way up there as the potential score. So just keep that in mind. We're talking about getting in here or in the at what did I say, 2070, and it went up as high as $26. So we're talking about over a $6 move here in just a matter of a few days. So don't get bitter at a ticker symbol, and don't sit there and say I refuse to play it again, because it's gonna hurt that much more if you see a chart setup that you know what it is and its potential. You pass it by and then see it do some sort of explosion like this. That's gonna hurt much more. All right, for our next one here, first things first, down here, signal line above 0, excellent. Establishing what kind of setup. A little bit confusing on this time frame. You can see it's basically going sideways. However, if we scrunch that up some more, you can see, all right, beforehand it was going down, so it's a down sideways, therefore it is dormant. As far as the 20 and the 50, some pretty big space here. The one thing that would keep me feeling okay is that, okay, we just had a gap up there, so that would be an area where, okay, potentially it is a play here that could be made. And I guess with the way I'm stumbling across my words here, I would probably move on from it, just because, as you can tell with the way I'm stumbling, I probably don't feel totally comfortable with it. I'd want to see some sort of action with that get closer. So let's just see what would happen here. So now it might pop back up on my radar here. And all right, now it's gotten closer. You can see the 20 has a strong uptrend to it, with the 50 going officially sideways now. It's just a matter of time before it starts to head up, and especially if we get an explosive move upwards to break this current area of consolidation here. Remember, we had the gap up. The gap's been holding its lows, so that's just general chart knowledge right there. So to me, all right, it's all looking good. It's looking legit, and with that, I would add in my trigger point. But just to recap, remember back here, I was not feeling comfortable with it, so I would have probably moved on from it. And then if it had pulled back up on my watch list right here, I would have been, okay, now things make me feel better. So another example where, when I found this example, I'm not sure if I was thinking I would play it there or not, but now looking at it and talking out loud, clearly I was confused and not sure how my feelings on it would have been. So I would have moved on from it. But at this point, feel much better about it with the strong increase now here and that space being closed. So let's get the trigger point mapped out. As I've already mentioned, what I would like to see happen is if this consolidation period that's happening after the spinning top gap up here can break. If it can break to the upside of this range, that would be a nice little play. So this would be my trigger point up here, and then let's get our first profit lock point established. So for this one, you can see quite a bit of history over here. So I'd once again try to split the difference. So that would be the high of the range. Down here would kind of be the low. So I'd put it right up around here as my first profit lock point. So let's see what happens. Next day there, you can see the trade would be initiated. So now we have our 10 EMA and the 20. You can see that crash course just continues to be right on line. And then right here would be the first profit lock point getting hit. So at this point, we would now need to move to the next profit lock point, which for me would be right up there. And again, if you're somebody that can sit there and change it intraday, then you could have potentially been knocked out of two profit lock points in the same day. First one down here, and then the second one you can see up here. But let's just say that you were not able to change it during the day. So let's see how that would have changed it for you with the second profit lock point here. You can see you went up there and hit it again, hovering right around this area. So this is a great example. This area is acting as resistance as we would expect it to. That's why we've locked in some profits right there, just in case it decides to roll over on us. Right there, a good day. And now we have a nice little move happening. 10 EMA people would be out right there. So let's see how the 20 SMA people would hang in there. And right there, 20 SMA proves to be the better route here. Now, there's been ones where obviously I've said the 10 EMA has been the better route, but the 20 SMA here, as you can see, has proven to be the better strategy for that. And then they would be stopped out right here. However, of course, they would have also had the opportunity to lock in profits, with this move right here. So just the difference. But again, another one where If you're not sure, move on, because it can always come right back up on your watch list, or depending on how many screens or whatever your system is set up, maybe you can have a secondary watch list where you can put kind of I don't knows on it, and then when it becomes more clear like you did down here, then you can put it up on your watch list. Whatever suits your system the best in terms of stalking these, but for me, it would have been a no-go, and then later on I would have felt comfortable with it. So for this one, you pulled up 1.56. Okay, beautiful. That's well above 0. You're looking down here at the excitement ruler. You can see it has been going down, so it is a dormant volcano setup. And then what is the 20 in regards to the 50? You can see that it's now basically crossing over, so we're all set there. And on top of that, just some general chart knowledge. The chart has recently broken and been closing above this pink line here, which is a 200 period simple moving average. So that's just kind of one of those little extra bonuses why general chart knowledge is important. So, all right, looks like a great setup. Let's now get our trigger point figured out. So for this trigger point, looking back here through the history, you could put it right there if you wanted to. I'd probably put it right up there, right around that low at that point. You can see it tried to get through it on this day, but couldn't quite. So keep an eye on there, and then we need to get our first profit lock point figured out. A couple different areas over here that we could use as our profit lock point. I would just use the previous high right there, which acted as resistance. If you wanted to be, you could move it up to there. Of course, with the higher the risk comes the more profits, but the potential you'll never get hit. But for this example, I'll put it right there. So let's see what happens. So nothing. Right there, you can see the price goes up there. Would have gotten me in, and then kind of had a crappy candle, but it's still above the stop loss, so I'd still be all right. And then right there, things are looking better. Hanging in there. And then this is one where, depending on the stop loss strategy, it would just be a flat out loser for the 10 EMA people. Let's see what happens for the 20. And I kind of already know what happens. And then look at that. So right here is an example of 10 EMA, just how different people's strategies can make it. For the 20 or for the 10, this would have been a loser. For the 20s, this would have been just a massive winner here with the big gap up here. But as you've seen already, sometimes it's looking like, why would you ever use the 20 SMA? So it's a matter of personal preference. That's why I love this example. Probably takes things to a little bit of an extreme, with this massive gap up here, but it also shows that these opportunities do exist. It could go from a loser with one stop loss strategy to a massive winner. But in other strategies, you're going to see that the 20 SMA would give you not nearly as much gains, or it would be a much bigger loss. So it's all give and take, all a matter of personal preference. So you pull up this chart and you look and say, all right, MACD signal line above 0, that is good. What is the status of the excitement ruler? Well, excitement has been declining, so we're in a dormant volcano setup. But what is the 20 SMA like relative to the 50? You can see straight up crash course there, barely any space they are about to cross. So all right, that looks good. Now it's time to figure out a trigger point. So for this one, a couple different areas. You could put it right here if you wanted to, the previous high of this candle, since this was the high of this move here before it finally went red, or you could put it right up there at that one. I'm just going to put it down there, and then we need to figure out for the next step, the first profit lock point. So remember, we always want to be relatively aggressive with that that first profit lock point. So this would be the next resistance. That's a little too aggressive for me. The next one, though, is right up there. You can see acted as resistance here, kind of splitting the difference between this whole area over here. So this would be the first profit lock point. Let's see what happens here. Next candle there. We finally have the crossover, still above 0, so everything's fine in terms of the stalking stage. Still would not be in. Here would be the entry into the trade. So now we're looking for our first profit lock point up there. And right there it would have been filled. For the next profit lock, and again, potentially this one, depending on your situation, you could have gotten another profit lock point out depending on where you would have put it. Let's assume you weren't, and you want to move your next profit lock point up to this area up here. Try to get a little bit more aggressive on it, and then you can see right here, fell down. So this is another example where, again, I don't want everything to seem like every single trade is going to be a grand slam like some of these examples have been. So this is either probably a break even or a small loss. The reason it would be a small loss is you were able to lock in some profits up here, potentially two areas of profit, depending on your personal time schedule with this candle here. But this is why we always need to be aggressive, because sometimes you can see, and let this example serve as why we get out with our stop losses. So remember the previous example, the 20 SMA looked like the hero. Now with this one, you're taking a loss down here compared to a loss up here. So that's just the nature of the beast and why you need to figure that stuff out for yourself. However, if anything, let this serve. This is why we have stop losses, because even all the way down here, that looks a lot worse than having been able to just get out right there with the shares. But regardless, point being, sometimes you're going to have head fakes where it's just not a real breakout, and then it's going to roll over on you. That's why we need to be aggressive with the profit taking. For me, it would have probably been a break even, because like I said, I usually sell half at that first profit lock point. So if it would have rolled back over, I would have gotten back out probably right around break even, maybe even a little bit positive, depending on the exact math on things. But point being, my loss personally by selling half would have been very small, but I think it would have probably worked out to being a small little gain. But regardless, not a massive loss like this. So small gain or small loss, who cares? As long as we're avoiding some catastrophe, huge loss like this down here, then in the long run, everything will be okay, as you've seen from some of these other examples where the home runs are hit. And just one of these can easily wipe away a couple small losses, whether you're taking it at the 10 EMA or 20 SMA. And then finally, the last point I want to note is if you're being more aggressive with your profit lock point, so maybe your first one was up here, well then this is the risk you run into. You would have never gotten filled at anything, and then this one would have just been a loser for you. Again, a small loser if you would honor these stop losses. So it's not like it was a wrong strategy, but just a strategy where for someone like me that's not quite as risky and would never put my first profit lock point way up there. It just allowed me to have a small little winner or a small loss compared to yours just being a flat out loss. So just an example there of not wrong to put it up there. It's a matter of risk tolerance, but just an example where more conservative profit lock people would have been able to get some profits out, whereas the more riskier would have not had any opportunity at profit lock. So good example there in terms of just why you want to be somewhat aggressive with the profit lock points, and why you certainly want to honor these stop losses so you don't get stuck in any sort of moves like that. So for this example, I want you to, let's just say that you're kind of on a bad streak. You've been disciplined, but because of your discipline, you've had let's say 3 losers in a row where they've just been flat out losses. You had none of your profit lock points have been taking place, and you've had 3 losers in a row. Actually, let's make it 4. Let's say you've had 4 losers in a row. You're feeling frustrated. You've been disciplined though, so you've kept your losses small, and that's important. And now you find this one. So let's just have that be the overall context. You're on a four trade losing streak. Granted, when I say loser, they've been disciplined losses, which means you've kept your losses, within reason and haven't let anything, get out of control. So you see this one. All right, this one is at 0.03, so that is positive, good. Looking at the excitement gauge to figure out what sort of setup we're dealing with, you can see here sloping down. If you're still not quite sure, scrunch up the chart. Okay, you can see previously it was going down. This was just a little blip in a much longer downtrend, so we know we're dealing with a dormant setup here. What is the 20 SMA doing? Although not above, you can see very evident crash course, barely any space between those at all. So all right, looks good. Let's now map out our trigger point. So the trigger point to this one seems pretty straight up to me. You have this gap down here, and that high would act as a resistance. So if you bring that down to right there, you can see that it also did a good job of acting as resistance right there. So this would be the trigger point. With our profit lock point, a little bit, I don't want to say tricky. I would say it's pretty straightforward in my mind, because if it does break above here, we would enter into this gap, and with a gap up, that makes things usually pretty darn attractive. So let's figure out our first profit lock point. So for our profit lock, we'll put this right up there at that level of support. That will be sure a little bit more aggressive than normal. However, again, use your chart knowledge and understand that we've had a gap down here, so this would make sense as a good first profit lock point. So let's see what happens. Nothing there. Still zero, or still above 0, so we're fine. Right there, still above 0. 20 is now officially above the 50. Yes, that's what I meant to say. Right there, started to head up there, would not have been filled though. And then right here, you may be questioning, thinking, well, how did this one work? Because it hit the initiation point and then hit the stop loss area down here. I went back and looked at this one. It opened here, fell, and then the rest of the day was bullish up here. So again, you would have gotten filled, or it hit the stop loss here first, but you would have never been filled in the first place. Just to zoom in real quick. So again, it opened here, and then looking at the intraday, fell down here, and then has since been moving back up. So you would have been okay here and gotten or entered into the trade right here. So right there, you get a nice little gap up into this already gap. So this is kind of like a little mini blue sky breakout here. Still hanging around up there. You can see the 10 EMA people, they are now at break even. Worst case, 20 SMA people still have work to do. And then right there, first profit lock point is hit. So now let's figure out where our second profit lock point would be. Let's zoom up the chart some more. Next one would be, depending on your, aggressiveness. Well, this one's kind of tricky. I'd put it right there. My rationale, as you can see, it acted as support right there and right there. But that's definitely not, an exact science. I'm just kind of figuring out the area there. Again, understanding the context of the situation, being inside of this gap here, can have some nice potential. So let's see what continues to happen there. And then look at that, big gap up. And, I'm not going to sit here and say that this happens every single time. However, remember what sort of strategy we're having. We're finding dormant volcanoes where things are starting to rumble again. And if there's some true strength behind the rumbling, then yeah, big moves can happen. Again, not saying a gap up like this is going to be happening on a routine basis. However, we're putting ourselves in a context where when we keep the losses small, so remember the context of this, 4 losses in a row, 4 small losses. Look at this move. This wipes away everything plus some. We're putting ourselves within the context where we don't have to win every single time, and we certainly don't have to hit home runs every time. I mean, as long as we're keeping our losses or small, or at least at break even, or just kind of a normal size loss, we're surrounding ourselves with the potential of these sorts of moves, and you'll see more examples like this. And while I'm not going to say all of these examples are easy to find because it happens all the time, that would be misleading. I will say that when you just stop and think about what we're trying to do here, remember there's a surrender and there's a panic that's already taken place. There's already been some hope, and now we're trying to catch from the hope into the excitement. This is excitement here. This is the sort of context we're trying to put ourselves in. So even though you may be on a losing streak with it, just remember you're in the context where one of these plays could always be right around the corner. But let's just figure out and see. I mean, if this were me, I'd be having locked in some more profits, kind of screw the second profit lock point and then letting them ride. I mean, I'd be like, all right, I'm taking the majority of my shares off the table up here, but let's see how things would have played out. So you can see everything is caught up. Depending on what sort of cushion, how liberal you were, potentially stopped out there. If you don't use the cushion and just use that straight up, then yes, you would have been stopped out there. 10 EMA for sure there, and then 20 right there. So, but again, if this were me, I would have probably been majority out right here, just because that's such, actually, if I put myself in the mind or the framework of what the example I set up, if I was on a 4 trade lose streak and I had a big gap up like this, I would have probably been totally out right there, because that would have wiped away all those losses and put me well in the green, and I would have just been happy with that. And from a psychological standpoint, so and although that's breaking my own system, if I'm being honest with myself and knowing my the psychology of how my brain operates, 4-game losing streak, then all of a sudden, or 4 trade losing streak, then you get something like this. I would have probably been all out right here. But I mean, if that's what I'm doing, breaking rules after massive gains like this, then so be it. But after something like that, I would probably be out. But had you stayed in a little bit longer, yeah, you would have had a few more dollars, and you would have been had a more profitable trade. But again, putting myself in that context of how I set it up before losing trades in a row, I would have been happy right here, and probably taking my wife and family out to dinner after something like this, with the streak ended in a big way. Want to get another one of these examples in here where we just have kind of a safety precaution. So you pull up this one and it's negative 0.1. So you're like, oh, it's 0.1, no big deal. I mean, look at this, very obvious setup here. I can easily tell where the trigger point is up here with all these highs. And yeah, I would agree with you on everything. But But where I would start to disagree with you yet again, putting aside the negative MACD, is you look down here at the 20 relative to the 50, and there's still some pretty big space in here. Yeah, I guess they're on a crash course, but still a little iffy, and super iffy when you already consider that it's not even positive yet down here at the MACD signal line. But let's just see how this plays out so that you can see how why these rules are in a place. Whoops. Sorry about that. Why they're in place the way they are. So you see this, and we're going to put our signal line right up here, which I would totally agree with. I mean, that makes perfect sense. You have all sorts of resistances up there. So let's just see what happens. So the next day, it gaps up, and it would have opened right there, and then using, like I said before about the gap up strategy, the trigger point right here just becomes the entry point. So you can see right here, it will have fallen back and filled you right there. The 10 EMA would still be your stop loss with the 20. So right here, now you're already kind of in the red a little bit, but at least it's still above your stop loss. And remember, you have, and at this point, it does go positive. So had you followed the rules and waited for it to go positive, the chart would look like this. So at this point in time, you'd have the trigger point, maybe not quite all the way up there, but higher than what it is right now. And then you can see right there, assuming you're disciplined, 10 EMA people would have been out for a loss, 20 SMA people still in. And then right there, 20 SMA people out, assuming you're disciplined. However, let's take a journey down the undisciplined route and see how that would have turned out for people. So right there, stay disciplined, or else you're going to get yourself caught into something like this. And that's not going to be good for anybody. But at the same token, this was never even a trade set up to begin with. Yeah, that looked attractive in terms of the trigger point being pretty obvious. However, was not positive. I wouldn't exactly call this a crash course with all that space between them. And then you saw the results of that. So just a quick little example there of why we have our safety precautions in place. So here's that same chart we just went over. Now we're tracking it again and going to follow the rules on it. So you can see right here, the MACD signal line is at 0.04 now. So it is positive, so that's good. That's what we want. And now we need to figure out where our signal line is going to be. Or not signal line, excuse me, our trigger point. So this one's kind of tricky because me personally, I would never put it all the way up there because my mind and just general chart knowledge would say, all right, so my trigger point's right there. However, then I have this resistance right here, which is the 200-day sloping right down on top of me. So if anything, it'd have to be a quick break. Maybe there is another entry down here that I could get where I could make this my first trigger point area. So that's how my mind would work, and just using general chart knowledge is, putting it up there and then knowing that the 200 period is not that far above it doesn't make too much sense. So I'd be looking for an area a little bit closer where, again, I could make this my trigger point. So let's look back through the chart history and find something that could be a better area or a better trigger point. And if I look back through the history, I see this area right here, which you can see lots of price history all around it. Sometimes price has been below it, above it, below it. Point being, lots of kind of clutter right in this area right here. So if I split the difference, you can put this area right at that trigger point there. And then that makes it easy to now know where I want to put my initial profit lock point. So I'm not putting it somewhere just slightly below, the big resistance up here at the 200 period simple moving average. So as discussed, we'll just put that right there. Now I feel better because more than likely I'd want to make the second profit lock point, the 200 moving average up there. So let's see how this one unfolds. Right here would get filled. On this period wouldn't have gone up and hit it. However, this one right there, big move. So I'd have gotten shares there. And depending on my personal situation, I would have been able to, capture this profit lock point and this one because, I'm able to sit at my computer all day. However, if not, and let's say you weren't able to capture this, you'd come home and say, hey, that looks great. That's awesome. Now I need to readjust it. So depending on your level, you could put it, up here and be pretty aggressive about it. Or you could just say, if it retests those highs again from today, then I want to take my second profit lock point. So let's just put it right there on the conservative end. And you can see next day does hit it indeed, and then starts to go on a very nice move where even if you were aggressive and had put it up there, you could have seen right there for the aggressive people. They would have had that much more profits. But point being, all of our second profit lock points were hit. Now it's just a matter of following our stop losses and seeing where that takes us. So right there, close but no cigar. Another good example of how the 10 EMA can do a good job of holding steady when it gets pretty close. And then right there, 10 EMA out, and then right there, 20 SMA people out. So very nice looking, very nice trade in a pretty short amount of time. And both, you can see that the 10 EMA was better than the 20 here because you got out sooner and you got out for more profit. And both of these still would have allowed you to capture this move here if you wanted to lock in a few additional profits. But all in all, good trade. And remember, with this one, it actually started out as the trade setup that we wanted. And I should also note that even if you had done it from right there, it would have worked out fine. But from just a chart perspective and a risk versus reward, just didn't make much sense to do that there with the 200 sloping right up above you. Just seen too many times where it's come up there and then gotten rejected from it. So that's why I would have played it the way I did. But goes to show you, when a volcano is truly erupting, it doesn't matter where you're going to put your resistances because it's just going to keep on pushing upwards. So good little example on that note. All right, in this example, you can see that the MACD signal line is above 0, so we're all good to go on that front. Excitement ruler down, so we know that we are dealing with a dormant volcano setup. 20 SMA relative to the 50, you can see it has crossed above it, so it's just flat out bullish, not bullish speculative or anything like that. So now it's just a matter of figuring out where we want our trigger point to be. So this one seems pretty straightforward to me. I mean, you had the move here and then it's kind of consolidating. So like this previous part in here, if you would have used that high, you can see it would have done a good job of forecasting the move up. So I just make it right here at this previous high. And then we need to figure out where our level of, or our first trigger point is, so that will be next. So again, we always want to be somewhat aggressive on that first one. So to me, that point seems right there. If you look back here, you can see it acted as resistance there, resistance again. So that seems like a very logical area to have our first initial little profit point. So let's see how things unfold here. You can see the next period is where you both get hit and would have been filled on the first profit lock point. So that is always encouraging. So let's move now to another profit lock point. You can see here kind of there is this little channel here. So put the top of the channel, we'll move that right over here. Again, depending on your aggressive level, you could put it up here at the very top of that channel if you'd want. Me, I just always am looking to get some nickels and dimes wherever I can. So my second profit lock point would be right there. You can see that day, and then another move upwards there. So let's just see if I would have gotten filled there or not. So this high was at 57.30, and this high went as high as 57.25. So I would have not been hit on my second profit lock point there. And then you can see there things petered out. 10 EMA people are out right there, and then 20 EMA people are out right there. So depending on how aggressive you were with your profit lock points, you could have been hit with one or maybe neither. But point being, I wanted to end this video session with this example just because I want to stay away from thinking that every single one's going to be a grand slam, and why it is important to be aggressive with our profit lock points, because these things exist out there where they break and then just fall back down. So we have to be aggressive with the profit lock points. Yeah, this would have been pretty frustrating. I put it up at 57.30 and then it got up there with a nickel and didn't hit me for my second profit lock point. However, on that same token, since I usually do sell half the shares anyways for that first profit lock point, this would have been, would have gotten out right here. So still slightly below where I entered, but I would have locked in profits up here. So it would have been probably a small little gain. So it wouldn't have been a loser, but wouldn't have been like a massive winner or anything like that either. But does show that we need to honor our stop losses, and more importantly, need to, well, no, I take that back. The most important thing is to always honor the stop losses, but did want to show that we can't assume that everyone's going to be some monster mover with some monster gap up or anything like that. Have to be aggressive in our profit taking for at least those first couple of sales, and then from that's when we can let them ride. And that's why we want to have shares that we can ride for those big gap ups. But it's not like those big gap ups and stuff like that happen all the time where we need to be hanging on to 75% of our shares. We need, when we're in the green and it starts to go our way, we need to start to lock in profits, and then we'll let the rest ride. That's the whole point of that. So Maybe kind of a buzzkill to end this session of case studies on one like this that doesn't really explode upwards, but I want to keep everybody grounded. I want everybody to stay on the same page of we need to be aggressive with our profit lock points so we can ensure that we're hedging our bets against any sort of moves like this. So on to the next case study session.